Hi, so we're going to take a look at this trade here. This trade would have been in a downtrend. So the intermediate term is down. Then we have confluence on a 5 minute for the entry of this. So where we're talking about this is this area here. This is an attempt to break out and hold above this, and we can infer that it's a possible failed auction because of how this spikes up higher and then continues lower. So this area here would be an ILVN, roughly speaking. This is a failed base and a bottom. This is another ILVN right here. And then we have the market as it comes down, accepts lower inside of this value range. Or rather, I'm not exactly sure how you'd say that. It forms value lower in here. Above this range, we have what you could call maybe another ILVN. Either way, it's going to be a range overshoot return. The range of this area is going to be this high right here, and it forms a high right there. You can see that the market comes down, it trickles a little bit lower. There's some failed initiative selling on high volume here, which serves as support. But as it comes up here, it strikes that level and comes back down. So we're going to take a look at this point here where we have confluence of the 5 minute chart with an engulfing candle. We might take a look at this one too. So let's go ahead and do that. This is the open where it touches this level or barely overshoots it. And let me make sure that I have that drawn correctly on the 1 minute. The high right there would have been right about there. If we come over here, we can see that this market strikes that high, overshoots it slightly, and then forms a range overshoot return at the 846 level. This is on the open, and so that's where we would be looking for possible range overshoot returns, and we do get one here. So let's take a look at the 1 second chart for confluence on that. So this is what this looks like on the 1 second chart. We can see that the market tags this level basically exactly. And when we do that, there's a reversal here on the 1 second. There's not multiple time frames. You have an intermediate downtrend, but the trading time frame is up. However, we can see that the market did make subsequently lower lows, and then it puked pretty hard off there. So we have a big high volume push up here, a failure here, and a failure here. A good place to sell this, if anything, would have been when the market hangs here on this 1 second. We see 3 seconds of selling. It just hangs there and then continues. That would have been the best place to sell this. This area of no return, this area of selling that comes down and holds, that would have been a good spot to sell right there. We would have had a move almost immediately to the bottom of this. This is, how do you call this? You call it like the bottom of the intermediate failed downtrends or something to that effect. Either way, it's going to be these 1 seconds that push down. So we have a high volume 1 second push on this candle right here, and that would have been the profit taking level for this. So a trade off of that would have been entering there, a stop above that, and a target down there. We would have had almost a 2R, 1.6. The odds of this, I don't know. I would think they're slightly higher than 50-50 if entering on these hangs. We would definitely need confluence with the shorter term time frames, especially against this. And we could call the trigger of the short term downtrend flip possibly lower lows on the 1 second. When that happens though, we're looking at areas like this of this higher volume push ups that hold. So you need to be wary of those and sell only inside of a retracement on that. This area right here would have been the sell in the structure of this downtrend because we have this time spent just hanging lower and holding there. There is not triple confluence on this though, so that does reduce the probability. Ultimately, this trade ran all the way down to here. When we have this break here, this is a flip of the 1 minute time frame, and so we can look for the same sort of dynamic in here of a trading or micro time frame flip where we have this 2 new lows here, 3 new lows there, and this is the hang area. So in the 3 new lows and then hanging, we could sell right here with this hang. It got tagged right there. There's another hang right there. and we can see that that hanging area right there is a viable place to sell, especially when we have another reversal there. So we have these hangs, there's another reversal here, and then once you get this, you could just sell right here. You could also sell on a return here with the confluence of the micro time frame. So another hang, hang. Those hangs after having flipped trends are viable entry points. So that's the first trade of this sequence. The important context there is that we are in that intermediate downtrend. Right here, it's defined by this flip, this break here, holding lower, and then we have a range overshoot return, and then we have a micro downtrend inside of that. The next one we're going to look at is going to be right here, I believe. It might actually be a little bit later. We'll take a look at the 5-minute chart to see. So this would have been right here. This is a very, very good trade using higher time frames too. So it uses the 5-minute. We have a failed breakout here. This is the level of the range overshoot return. We have a push up. We have a possible failed breakout here, but what we do not see is any sort of 5-minute engulfing candle. So we could see that when this tagged here, we had a 5-minute engulfing candle, and then we still had another 20 or so points move down into the failed. It's also failed initiative selling level there. When we have this move up here, we have an attempt to hold that. So this is an attempt to break out with a second entry long here, push up, more attempts to push this up higher. And this 5-minute candle engulfs entirely. So this candle between 41 and 11 is a big sell side signal. And then we can see that if we sold on a retracement from there, somewhere maybe at 20 or so, we could have had 50 points off that. And that's a beautiful trade. So the context, intermediate downtrend, range overshoot return, and 5-minute confirmation with this engulfing candle. And that is a beautiful, beautiful strong trade with 50 points of downside. And I guess the risk reward on that still would have been about 2 to 1. If we go to here to look at the 1 second, this is the bottom of that engulfing candle right there. And we can see that that selling on a retracement would have left a really good entry there. We can even do that possibly looking at this with this micro time frame flip. We have 1, 2 new lows, and then selling that hang would have been there, or even just selling somewhere in here would have been good. We can also see that it is holding below this high volume 1 second candle up. So this entire push down here invalidated all of this, made a new low behind that, and that's where we're going to sell. The market, now that I'm noticing it, responded exactly to this level of this hang right here. It's not towards the high of it. It barely touches the congestion prior, and just selling inside of here would be good. Really selling anything inside of here is a good move. We also see confirmation on the 1 second where we are invalidating this by going below it, and then selling up in that congestion was good there. For almost no drawdown, selling either in this hang area here, or if we needed micro time frame confirmation, which I'm not sure we do after this engulfing candle, considering how long the down movement is, we could have waited for an invalidation of this 1 second candle here and sold the congestion right there. The ultimate target of this move here was this congestion down at the bottom. We would have been looking for downtrend continuation, possibly aiming for somewhere down here or the low of the day, and we did not get that. Instead, the market comes to here and then stalls. So that's stalling at 10. That push on the 1 second here is right there. The 1 minute is right there. That's where that starts. And we can see that it touches that exactly. If we were trying to hold this for continuation, which we were when trading this, After you see this, that's a sign that there's a lot of buyers here, and then just taking off at this pivot high that got invalidated would have been the move. So instead of 84 or instead of 77, we would have been out at 84, which is a lot better than eating this whole retracement and getting stopped. So this was the best trade of the day that I took with all of those reasons there. There is another example of what is almost the exact same setup. This is the ILVN inside of this range, so this would have been marked as a possible sell area. We overshoot it a little bit, hit the bottom of this congestion. This is also still just resistance. This is another area here. We push up into that range and tag it exactly here. This 5-minute candle, if we're waiting for 5-minute confluence, was not a good sell candle because of the bottom wick right there. So we would not have initially sold that. And we see that the market does shoot up. There is a wick here, but the bar is much bigger and the wick is closing in the bottom 70 or 80% of that. So this right here, this 1335, 135 CST candle would have been a confluent intermediate time frame reversal candle for this downtrend, for this range overshoot return. And we do see that the market presses very much strongly down from there with a lot of downside. The market pushes past the top of this, and selling a retracement to that area would have been good, would have been great. On the 1 minute, we see that the highest volume 1 minute upside candle is right here. That would have been a good place to sell. Once this triggers a reversal level, we can't, or reversal circumstance, we can't just sell down here because it's 70 points. But selling up inside of this 1 minute green high volume candle would have been a great entry. So let's take a look at that on the 1 second. As we're scrolling past, I would like to just make note that on this one, this is the one that didn't work. We had the tail right there. Still selling up here inside of the green candle would have been good, although that didn't culminate into any real returns. So the area for where that range was would have been right here at 74 to 57. We see this push up above that, and then we have this is the 5-minute engulfing candle. Huge push down, and then we see an attempt to hold that, and then there is a bottom there. So we have this big push up above that, a giant push down there. Selling the top of that would have also been fine in a micro time frame. The stop on that very low, but then also the probability relatively low because of this uptrend. Inside of this is a 1 second area of high volume that was invalidated right there. Good place to sell. And then we have another one here, also a good place to sell. So selling right up in there would have been good. This is the engulfing candle. And then if we wait and look for confirmation on the 1 second, these are both scaling time frame, smaller time frame. We have the larger intermediate downtrend. We have the overshoot reversal marked by the 5-minute engulfing candle, closing at its low, the bear bar there. This is a possible area for reversal. And then when we see the market make 2 new lows on the 1 second right here, that is another trend reversal right there. And then we see this area of hanging and subsequent lows. Selling inside that hanging would have been perfect. We would have only had a 20-point stop on that. And then the market just continues vicious downtrend. No reason to cover this as long as these high volume 1 seconds are holding. We can even see that there's possible ways to scale in there. Although there's resistance, we have this now forming the top of a range. Trapped buyers selling there. As long as it doesn't go convincingly above that, it's fine. Same thing here. Same thing here. Still holding that. This one, however, is problematic. Moved above this. That implies two-sided. And then once we go above that, that would have been a possible end of that downtrend, and it was. So those are the trades.